Good morning. It's Thursday. It's just after 9 a.m. So it can only be Coffee Kickstarter. And this week we've got Coffee Kickstarter with a slight difference. We've got Fiona back with us and we're doing a case study. But first, let's just say a quick good morning. So a quick round robin. So it's good morning from me, Karen Stanbridge. Sam, over to you.
Hi everyone, Sam Beddoe, Revive Holdings.
And Fiona.
Good morning, everybody. I'm so excited that you ladies have asked me to be back again. I'm here with my coffee. Where's your coffees?
I've got water.
Oh.
Coffee ahoy.
Cheers. Well, I hope everybody watching has got their coffee or tea as well. So tell us what you're drinking in the comments.
So Fiona, tell us a bit about this deal.
So, you know, when I was first starting out in as a property investor, I always loved hearing the stories about various deals. I was like a sponge, you know, taking on those stories. And I just thought it'd be great to share sort of one that I'd done right before the pandemic hit in February. And ironically, Karen, I can't remember if we were at an event together, and I think I just had it agreed literally whilst I was sitting at the event. Do you remember? And I showed you the picture and you were oohing and ahhing. I just had the offer agreed via email. So we actually have a connection on that, don't we?
Exactly.
So, yeah, so I did a deal. I've done sort of some deals since. The offer agreed via email. So I had this deal agreed November of 2019, which was to purchase a commercial property in a little village called Kirtling, just outside of Newmarket. It was one of my favourites, below bricks and mortar, buying it for below bricks and mortar value. When I sort of break the deals down, I'll explain a little bit more about that. And yeah, I agreed the deal in November, worked through progression and purchased it, I think it was like the 29th of February, and of course buying a pub right before a global pandemic when they're going to close isn't always the best, but actually it's still been fine. The tenants have still made their rental payments. It's just a nice little deal. So should we see who's on first, and then I can jump in to start explaining a little bit more of the meat on the bone on that deal.
I can see Sue's on board, but I think she might be on from my personal stream. Sal's in. Some other people are joining through LinkedIn as well.
Okay, let me just bring it up on my other screen and share it.
Here is here. I can't see all the LinkedIn people though, because they'll come in through the link directly.
Yeah, I'll just share it on mine. I'm not as popular as you ladies. My 3 friends that I have on Facebook might join in as well.
No, you've got a massive following, and this is one great deal.
Yeah, yeah. So do you want to bring the slides up then? Should we get cracking?
Let's do that. So here we go. So I'm going to share.
The power of technology. I've done some slides.
So can you see?
Yeah.
I can, yes.
Fabulous.
So what's the best thing? So I'll just start talking you through the deal. You chip in any questions you've got, and anybody that's logging in and listening, if you've got any questions, put those in the comments, and then one of you ladies, if you can sort of shout that out as we're going along as well. So I guess it was 29th of February then. So this is a picture of the property. If we just go to slide 2, it's just very lovely. So sort of the things that I picked up about it, or the facts on this deal, was that it was located in this quite affluent village, actually, Kirtling, just outside of Newmarket. And it was conveniently, I'm not particularly worried about commercial being in my sort of 1 hour from the office boundary, but this happened to be 34 minutes from my office. So my Nissan Leaf electric car could manage to get there and back just about. And So, and it just had quite a large, there's an aerial photo later on, but it was a large footprint, big lump of property. And the operators that were renting the property on full repairing, maintaining lease had no serviced accommodation offering, despite this large lump of property as well. So that was an interesting element, that, you know, it was located very close to, obviously, we've all heard of Newmarket Races, and they didn't have any hotel rooms.
How close to Newmarket was it then, Fiona?
Sorry, what was that?
How close to Newmarket is it?
Oh, I'll show you that in a minute. Very close. I've got a slide on that. I checked that out. And it also had capital allowances. And I always think of capital allowances as like a bonus. I don't particularly always make the deal be about the capital allowances, but it's certainly a favourable element if I see that they're there. I had a 15-year FRI lease. It wasn't, you know, the highest of rents, 18,000 per annum, but it was on for 250,000. So we weren't talking about really big money, and it was direct to vendor. So I was doing a thing I call panning for gold. It was a Saturday night going through businesses for sale website, and they had listed the business for sale, sort of overlooking the fact there was a substantial asset also included with the business. So they hadn't and they'd listed it themselves to obviously save on agent fees, and, you know, poorly advertised, I guess is the best way to put it. So if you just go on to the next slide, this is from the Rick's report that I had done. Food-led pub, very, very well known for its food, in fact, run by a husband and wife who had a lot of experience in hospitality over many decades, and very well known for they do a lot of theme nights, like Japanese night, Indian night, and the lady cooks and the husband does the front of house. Located within the rural village, 2-story detached property built in the 17th century, 2-bedroom residential accommodation used by the occupiers, the tenants. The additional ground floor bedroom room is not in service, it's just full of boxes. And the building acceptably presented with some wants of repair, but, you know, given the age of that property, that's to be expected. So if you see the next slide, that's my email that I sent, slide 4. If you can click on slide 4, this is an email I sent, or an extract from an email I sent to, I don't know if you can make that any bigger. I'm getting a little older too, so I find it difficult to read the smaller print. This is an extract from the email that I sent to the seller after viewing it. So what I did there is I asked a couple of questions, tried to make it casual, and I snuck in the capital allowances question a couple of questions down, so it wasn't quite so obvious. The tenants seemed to think they had a break clause. I don't think they were particularly concerned about exercising that, but I asked about that during my viewing, you know, just building rapport sort of with the tenants, just finding out what was going on. And they didn't actually have one, but apparently there were multiple leases banded about when they first set it up. And so I think they were a little unclear on which lease had, you know, finally been the crystallized lease. So as you can see, I've snuck in the capital allowances. And then point number 7, the tenants had indicated they're going to leave, but actually they've changed that position now. So either way, that would have been fine, because I would have probably then done the service accommodation bolt on and probably asked for a lot higher rent then if I relet that. So bearing in mind that this is November, we're talking here, November 2019. And the seller's reply in the middle of that had the golden words and put on point 5. So they kindly responded to each point numerically. We do not know anything about capital allowances and not claimed any as far as we're aware. And then we started discussing that further. They kept saying there's no allowances to be claimed, but you'll find out there were in fact substantial allowances to be claimed. So, so that was good. If you want to just put that on the next slide. So Newmarket Races, this is, you see the red lion. I must have been out of hours when I snapped that map. So if you go to the next slide, you'll see, I think it's the next one. Yeah, it's, shall I take the 14-minute route or shall I take the 17-minute route or maybe the 16-minute route to get to the races? So the lack of this sort of the service accommodation offering. It's just money that, you know, that could be being more income into that venue, but they seem very focused on the food side of things. Okay, and next slide. We got any questions so far?
I can't see the questions because I'm sharing the deck.
Yeah.
No questions on Facebook so far.
Okay, so this is the sort of footprint of the property as well. It backs onto open farmlands, and if you can see that area that's got sort of what looks like a conservatory, that, or from that fence line to the right in the rear is garden, and it's the garden used by the tenants, but really largely unused. And then it's got a really big car park as well. And then there's sun. The sun is primarily in the front of the building, so they've got all their sort of beer garden and so on in the front there. So there's quite a bit of space there that could be used. So you see the bit that it's boxed in, the red and the green. That is, so the owners, the people that I purchased from, that was the original footprint, and they had split that off, title split that off, built a house, lived in the house, and then sold it on and left. Had moved down south, I can't remember where, but they've moved down south and operating another pub, and at least the main pub was leased out and really was surplus to requirements. There's sort of, I think that they had made their money on that 4-bedroom house. Obviously, possibly a capital gains play there too by the fact they lived in it. And it still left a reasonably sized footprint. And considering it was on for 250,000, I was pretty sure that I was getting some money, but I didn't actually pay 250,000. So if you want to put it to the next slide. First thoughts were a couple of cabins. In fact, I didn't do a very good job there with my stars because they should probably be a bit further back. But I was putting a couple of self-contained accommodation cabins in the back, maybe a little annex off the back of the building as well. You know, that was sort of what I was thinking. And next slide. Or even perhaps, though not ideal because of the age of the building, possibly even going up a floor onto that massive annex. So if you see, there's a sort of the second door to the right, that's largely unused, most of that space to the right. It's just got boxes and storage and stuff like that by the current occupants. So if you want to go to the next slide. So we always want to get down to the nitty gritty numbers. It was advertised for 250. I offered cash purchase, 220. So kind of 12.2 multiple of current rent, which I thought was slightly on the low side. And I thought, well, haven't claimed any capital allowances clearly. I might have a capital allowances provision of around 10 to 15% of sort of purchase price, asking price, just as a rough rule of thumb. So I was thinking that would come in at 20 to 33,000. So I arranged for my capital allowance surveyor to go through, and it was 74,000. So when you think of that as a proportion of what I was paying, that's quite a lot. I unfortunately was buying via a limited. That's where the money was to buy it. I couldn't take that personally to then buy it because that would trigger a tax event. So you get relief at the tax that you're paying in the entity that's buying it. So I got 19% relief if I'd have bought that personally. So I've got one going through at the moment that I'm buying personally, and I'll be getting relief at 40%. So, but unfortunately not quite as high at capital allowances. And the capital allowance survey was, just over £2,000. So I thought 74,000. I was quite sort of surprised at how high. And there were a couple of items in the property that I learned actually like a walk-in fridge freezer. That was, they really can rack the capital allowances up. So if you want to put it on to the next slide. Just thought I'd show an extract from the capital allowances election document that showed the £74,000, the capital allowances survey that's there. So my capital allowances survey takes care of all the necessary paperwork, which is nice. And then obviously this is completed by solicitors as part of the purchase process. So if you want to put it on to the next slide. So I agreed the deal in November, and then I completed in February 29th. I spent most of February out in the US because my husband's father, my father-in-law, sadly was ill, and we got a call early in February and we ended up out there. So that I actually exchanged and completed the entire deal from abroad. Not particularly new for me, but just, you know, you sort of got to clock that sometimes and just think, wow, this is just amazing that with technology, I can be doing all of this whilst in another country. I used, well, essentially cash. I had a little bit of a private bridge in the end, because I'd done another deal in January that had taken a bit more cash than I thought, that had come back. So come back, one that I thought wasn't going, had come back. So I didn't want to, interestingly, I had all the cash, but I didn't want to deplete because I always like to leave a certain level. And thankfully I didn't do that, because obviously when the pandemic came, I still had my reserves in place. So I got a RICS valuation of 250,000, and I'd already started talking to NatWest Business about taking on the lending, and they gave me the loan and honoured the loan despite the fact the pub was closed in April. So, and if you see under the little unicorn there, this is a note from the RICS valuation. On these specific assumptions, we suggest the reinstatement value for the existing structure, exclusive of VAT, would be not less than 350,000. So I'm paying 220,000. So, you know, that makes me feel reasonably good about what I'm putting my money into. Do you want to, next slide? So this was kind of the timeline. I thought it'd be good to break down how the capital allowances work during the deal. Would that be useful, or am I just kind of nerdy and only one interested in these sorts of things? So
no, that's very useful.
So we agreed the heads of terms. I think the thing is with capital allowances, a lot of investors don't really use them the right way, or particularly don't know to use them, myself included. I've done several claims now over the years, but when I first learned about them a few years back, I had to go back and claim on some of the commercial buildings that I hadn't claimed them on. So I'm always very sort of mindful, because it's just money on the table. I've got a deal going through at the moment, another commercial building with £45,000 worth of allowances, and the seller just had no clue that those could be claimed. So the accountants, you know, obviously hadn't, well, the accountants had convinced them there weren't any allowances to claim, when in fact there were. So heads of terms were agreed, and you know, the response from the sellers saying they were not aware of any capital allowance being claimed. January, I got my CPSCs through, and do not know was put under that. So we sort of digging away at that a little bit. Seller believes the fittings and fixtures belong to tenant. So there was a little bit of an exchange, and the seller, you know, said that they thought the fittings and fixtures belonged to the tenant, but the ones that we could claim on, there were enough, as you saw, that belonged to the building. Seller will need to claim up all the allowances and transfer them to me under the Section 198 election. So that documentation is prepared by my tax accountant. I went on the survey because I was curious about, it was close enough to my office as well. And I was kind of curious because I wanted to kind of get a feel for how the capital allowances worked. And I hadn't attended a survey. I'd had several done, but I hadn't actually attended in person. So I had the bandwidth to go. We started having a problem. I happened to be in the US when this started as well. The seller's accountant stuck their heels in and said that there was no allowances to be claimed. And really what I think was coming out was that they were trying to defend their position for not having done that for the seller. Was resolved. My capital allowances surveyor is very clever. He spoke to the account, got it all resolved, and they signed the capital allowances election. We exchanged on the 21st of February, and I was arriving back in the UK on the 29th at Heathrow, flying back, literally got there when I got notice that we'd completed. So that was quite cool. I love it when the team is, everyone's sort of doing, everything comes together and all that. So can you just put it on the next slide? So my strategic thinking. So this is a slide, I did this a bit earlier in the year and I kind of left it in, talked to the tenants about adding the service accommodation rooms. I've kind of kicked that can down the road a little bit because, you know, those cabins are 30,000 each and I'm kind of holding on to my cash at the moment. So I may do this next year, no hurry. and then I'd probably put one or two in, try to start to help them if they can make sort of 30,000, 40,000. I mean, if they had 5 SA rooms at 85 a night's even quite cheap for Newmarket. So I had a hotel in Ely, which was a lot further away, and we would sort of get 100 a night when the races were on. So it could bring them in some significant revenue. And if I raised the rents, obviously that would then raise the investment value of the asset. But at the moment that's kind of on pause. One or two reasons. One, I'm really busy, and also I've got 2 purchases going through at the moment. So capital's there, and spare capital's in reserve in case there's really significant opportunities unfolding, first quarter next year or next year. Yeah. If you want to go to the next slide, is there any more slides left? So that house that I said they built next door, they told us split off and built. They sold that. I looked that up. If you want to go to the I think it's the final slide, for 466,000. November, that's when they put the other side up for sale. And I thought that was really interesting, considering I paid 220,000. And I think if you look at the land footprint as well, it's a lot bigger. And I paid it's not a tacit valuation method that Rick's recognised, but it did make me feel quite good about my purchase at that price. I could buy Red Lions all day long, really. I think that's it. Is that the last of it?
I think it is. Yes, brilliant. Let me stop sharing the slide a bit. We'll come out of those.
The footprint looks like it's doubled, doesn't it?
Yeah.
Yeah, there's quite a few comments that people are liking the yield you've got, the capital allowance information they're finding really useful. So yeah, definitely, really valuable stuff in there, because a lot of it's things that people either aren't aware of or their solicitor doesn't tell them quite often.
Yeah. You get a mindset shift when you've been in property long enough to start to realise you control the deal. And though you pay for advice, you've got to know a lot of things across a lot of things. And I'm lucky now that I've kissed enough frogs that I have fairly decent advisors, but it's always ultimately my deal, and I need to maximise it and be as knowledgeable as I can on let me just bring your thing up. I'm just trying to see if there's any, so someone's asked who I use for my capital answers, so feel free to message me and I'll do an introduction if anybody wants an introduction.
So Fiona, tell us, how does the capital allowance thing work? So you've got that agreement from the seller. So you've then done your survey and had a value.
Identify the allowance as claimable. Yeah. So then they do this section 198 where they transfer the allowances to you. Yeah. And I think they're then really supposed to put that on their tax return, but then that's on them to do. I think they agree that that's what they'll do, and that's the end of our responsibility. And then on our next tax return, we then make the claim for those allowances.
Right.
So, and then you receive them at the rate you pay. So if it's a personally owned thing, 40%, if you're a 40% taxpayer. It's also a nice way to get your tax bill down if you're having problems with your tax bill, like I always seem to do.
So if you made a profit in that year, then that value, which I think you said was about 19,000, just gets knocked off of the profit, but you're not paying tax on that part of the profit and £19,000 worth of profit.
Yeah.
You're not getting a check in the post from the tax man.
No, I to be fair, I don't know, because I'm always sort of struggling with the profit side, whether or not you'd get a rebate. I think it would probably roll forward on that side. Obviously, I'm not a tax advisor. I have a tax advisor, a very good one. I've kissed a lot of frogs. And the other thing is, I don't have, you've got accountants and then you've got tax advisors, and they're separate. And a lot of accountants pretend to be knowledgeable enough on tax, and I've fallen for it too. And then they're just not. So once I started, and a great thing is going out in community, talking to other property investors and getting tips off them, and then going back to your advisors saying, oh yeah, I've heard about multiple dwellings relief or something like that. And then they say, oh yeah, actually, because you'd be surprised at how non-proactive a lot of these people I'm going to get sort of hate mail from accountants and financial people. They're busy like all of us, but I'm not convinced that they're as proactive in my interests and affairs than you know, and it's really down to me ultimately to make sure that I'm optimizing all the elements of my business as much as I can. I've taken that kind of mindset on many years ago now, and I try and be as proactive as I can. Doesn't mean I know how to implement it. I wouldn't really know all the paperwork and all the rest of it. So I work with my advisor. Yeah. So now I have a running joke though about the walk-in freezers. So when I send him in one, I'm always like, "Is there a walk-in freezer?" Because it's replacement value. So this one was actually, you know, run down and switched off. And yet I could still, 15,000 of that was, I think, related to the walk-in freezer. So I sent him in, not even like hospitality. He went into dry cleaners recently that I'm buying, a shell, the tenants of dry cleaners. And I'm like, is there a walk-in freezer? So
it's key you get that right at point of sale though, isn't it? That you identify the capital allowances and make sure that you've got that opportunity to claim. You must get that right at point of sale.
Yeah, well, the thing is, it's a thing that I'm often banging on about called, you know, optimization, maximizing whatever's going on to the best of your interests. So C. Collins asked, out of interest, are you expecting the existing tenants to manage the service? Yes, I wouldn't be interested. I've used to do service accommodation for quite a while, and I exited that probably 3 or 4 years ago. So it's hospitality. It's, you know, it's not property investment as such, or it's a bolt on to property investment, and I'm just not interested in running an SA business. I have a place in Florida that runs as an SA, but that's because it's like a second home. So
one of the things though, and Sam kind of touched on it just now as well, and you mentioned about how the seller's accountant wasn't so keen to initially process the capital allowances. Imagine if you've bought that property, but you haven't been told there's a whopping great capital allowance there, and you only find out 2 or 3 years after you've purchased it, or at the point you come to sell it. You would be very fed up, right?
Yeah, you would.
There's nothing you can do retrospectively to claim, is there?
You can, yes.
Right.
Yeah, I believe so. That's not happened to me. So, but, has it? I think, yeah, no, saying that about 6 years ago was when I first started knowing about it. I had to retrospectively claim. So
if they've got that situation, should reach out to a good accountant or contact you to put you in contact with your capital allowances surveyor.
Yeah, and you typically pay a minimum of a sort of £1,500 plus VAT, and then there's normally a percentage of the allowances that are claimable. That's you know, but if it's in the couple of £100,000 purchase, you know, allowances range, you possibly, you know, it'll be £1,500 plus VAT, and it needs to be done obviously correctly, like all tax matters, the right documentation. Oh, Sue Maxwell Smith is reinforcing what I say, and she's obviously accounting trained as well, I believe. Tax has always been a full-time thing. You've got to be full-time in tax, and it's intensified in recent years. And I would concur with Sue wholeheartedly that that's correct. So a lot of people think that, well, I wouldn't even say that they're trying to save money by just getting their accountant to do it. I think the accountants make out that they're competent enough, and when, you know, depending on your size, they're possibly not. They're not understanding. And property in itself, like many industries, it's got its own specific taxation rules around your activities. So yeah. So no, I could, like I said, you know, these are like bread and butter little commercial deals. And, you know, to me, it's it's a passive thing. I don't have to do much. I collect the rent. We had a couple of emails exchanged during COVID. That's it. And, you know, we gave them a small delay on a small portion of the rent for a couple of the months. But we didn't write off any of the rent. So that's all good. Any other questions or?
Tell us more about this serviced accommodation element then, because you've got thoughts about something in the garden there, haven't you? And
yeah, well, I kind of thought, well, there's that bedsit room with the ensuite that could be converted. I think possibly the couple that run it, maybe it's that getting online and booking.com and all that other sort of stuff. And you know, I had mentioned it to them and they said, oh yeah, we thought about doing that, but we just sort of never got around to it. And then I was looking at, you know, the cabins that you can get. And if you get, I think it's the movable ones, you don't need planning permission. I'm not quite sure. As I said, it got kind of put on hold because of this global pandemic that occurred 4 weeks after I completed, or 3 weeks after. And I just, you know, been busy. I've been buying other deals. Yeah, so, but I gather they're sort of 25, 30,000 pounds each, and, you know, putting 3 or 4 in, yes, could help them bring in 60, 90,000 in revenue, but that capital outlay at the moment prioritised for other things. So I'd probably maybe relook at it if they did actually exercise the break clause, then I might do a bit more optimization work and then ask a higher rent on relet. So kick the can down the road a bit.
when the time's right for serviced accommodation and the races are back on and that sort of thing. Well,
there is that as well. The races weren't running, so
yeah. If the tenant doesn't want to run them, would you consider still doing it, but then having that as a bolt-on with another company running that?
Possibly. I'd have to look at the numbers, because I always think that when I would be the investor and outlay the investment capital, and then I would say have a company running it and giving me, I don't know, a 50-50 profit split, or I don't know, I probably prefer a fixed lease, fixed rent, and then they have all the uplift themselves. So I have a guaranteed rent or something like that. I'd probably be open to that. But of course the tenants would also have to be open to that running in conjunction with their food-led pub. So, and also interestingly, the person that bought the house next door, you know, the one we were sort of saying was on the minor footprint, was a jockey. So I had heard that quite a few of the jockeys were now giving trade to the pub as well. So that's good for them. Because, you know, I always want people in business to be successful. And I think a little small business like that run by a couple, you know, it needs supported in times like this. Yeah.
No, it's a really interesting site, and some land we're looking at, a small piece. We've also looked at these portable cabins because they're pretty amazing inside, and you can actually rent them for 12 months while you try it out. So you don't necessarily have to buy them up front. So there's an option to purchase, but there is an option to lease them and pay for them on a monthly basis. So there's some flexibility there. The only thing would be the services side, because with what we looked at, we would have wanted to have bought services to site, so electricity and connected up water, just so that it was a pretty decent service inside. So that's the one thing with it.
Yeah, I mean, as I said, I've sort of only just recently come up for air from a very busy 7 months. I've got 2 transactions going through now, so possibly something I'd look at on going into 2021 on the side, but you know, it's not, it's ticking over fine. And I did, obviously nobody's really asked about the capital down, because that was quite a lot of capital down, but I did refinance and get part of that back with the loan to NatWest Business. So bit of capital tied up in there, but I wasn't too worried about it at the time. You know, at the moment the return isn't the greatest, but I still think that there's so much opportunity to make some good changes there that, you know, I'll sort of seeded that for next year. So
is there capital allowances on the cabins? Sorry. Is there capital allowances to be had on the cabins as well?
If they're portable, I'm not sure, because I think that the thing is about capital allowances, it's fixed and immovable. But that's a good question for my capital allowances surveyor.
Yeah.
So.
No, I think you're right, but I'm not 100% either. But you can equally get like permanent log cabiny type things, can't you? Which could be another option, where they're kind of like mini log cabins with services in there with some kind of toilet facility at the back. So yeah, I don't know the answer. Sue may know the answer on that, but I don't know. What I was going to say to you is, going back to what you said about money down on that, it might be quite useful if you talk about how you put your money down, but how you're able to swap that money out with other people's money, so people get a feel for how much of your money you needed to leave behind. And yes, there would have been more up front, but how you swapped it out and stuff.
So one of the strategies I'm favouring now more and more, and I accept that it's possibly considered an advanced strategy, but 22 years in, is closing for cash or as close to cash as I can. So I might have a private bridge, and then sort of sorting it out later. I can't tell you how to do this deal as an early stage investor. You probably have to have a money partner of the money side or something like that. And as you know, I don't work with joint venture partners. I only work with money partners. So if people have got money that they want to lend and have first charge asset backed, then I borrow it, pay them back. I always do what I say in that sense. But yeah, I do the deals myself. And so as I said, I agreed the deal. And there were, I think 220 is probably the lower end of what they wanted, hoping to get, but the speed of the transaction was that December, January for 3 months. And in fact, some of the delay was on them, on their side, and their accountant sort of saying that there was no allowances to be claimed. I did remember thinking, what do you care really? Just let it go through. But he actually really tried to put some sabotage in. And because I think it was because he hadn't claimed the allowances for them. And there was a lot of them really, as you saw. So, but okay, I'm just concerned about my side of the transaction, making sure it works. So yeah, I put my cash down, and I swapped out with NatWest Business, paid my private investor back in April. So during the tumbleweeds of the first lockdown, he got repaid in full with his interest. And then, yeah, NatWest Business had the financing. So I swapped the financing for conventional high street bank finance. I could have possibly looked for a private person that might want to have carried the loan, but it's not. They probably would have wanted a higher rate than I was getting with NatWest Business. So I'm not clear what your question is about the finance side.
It was about how much of your own money you needed to leave behind, really, and how you swapped out the money.
I've left about 120,000 behind still in the deal.
But in some cases, would you consider swapping that money left behind for private money and pay them a return, just so that you can free up your own capital?
Yeah, I definitely wouldn't. If anyone's watching that's got capital and wants to do that, I could swap NatWest Business out. But the other thing is, I did leave a lot, sort of a fair bit behind in that sense. But I also, if I did an SA optimization and I could turn that rent from 18,000 to 30 or 35,000 and get that increased commercial valuation, because part of why I had to leave more in was because of rent cover. And so I would then actually be able to borrow more. So I would be able to pull more back out, or I might sell it, or, undecide yet. I mean, the thing is, when you start looking at portfolio level and you've got multiple things going on, you're dealing with things that you might then enact next year. So I'm planting a lot of seed deals, which have got optimization opportunities that I'll exercise, next year. So I might be dealing with 2 or 3 things at once and thinking, right, that one I'll do next year, and that one I'll do. And that's taken many years to get to that stage. I can't do them all at once because I don't have the
risk appetite.
Yeah, the risk appetite, and my team can only work on so much at any given time. And also, again, I did plan to maybe look at that quicker, but 2020 has upended a lot of things. We've had a very good year, make no mistake, very good year. But we've grown the balance sheet 10% this year. But and net profits also has increased. But we've been sweating at this year, working hard to make sure that all happens. So yeah.
What's your thoughts on exit plans with this if the pub trade continues to suffer in 2021?
Well, this is a food-led business, so I think that the food, and it's the only pub in the village. Is there a joke about that somewhere? I don't know. And so, you know, and well supported by the local community. So I'm not sure that that's going to be particularly an issue for these guys. And there's been development in Kirtling, so plan B could be that. I'm not particularly a developer. I often think that I can make similar returns myself. You know, I just know my blueprint that works for me that I'm comfortable with. I'm not, I'm going to be doing some development on the one I'm buying at the moment. It's got a car park, so I put a couple of flats in. So I prefer to consider myself an optimizer. And yeah, so, you know, the rent's being paid. So I wouldn't really, unless there was some issues and pain starts, I wouldn't really be looking at changing anything for the foreseeable future. I'm going to let that ride for now, and then I'll, to be fair, the occupants should be considering clearing that room out and maybe doing that service accommodation, but it's not my place to tell them how to run their business. So, you know, that's for them to consider doing. But if it needs a little bit of investment, they approach me. I'll see where I am at the time, what capital they want, what return I can get, that kind of thing. So
they were doing takeaway in the lockdown?
I believe so. I don't actually know. That's the beauty of commercial. I don't have to get involved in the day-to-day of what they're up to. So yeah, but is it bureaus?
Well, I was asking about the rates you're paying, but obviously everyone will get different rates when it gets to business loans based on their portfolio. So
yeah, and it was, you know, he said it's good in NatWest to honour the loan because we've got the loan was going through when COVID closures hit pubs, and yeah, I think they're very well secured, and obviously I have a balance sheet and a portfolio that they were aware of. But yes, I must say I was slightly surprised that they still lent the exact amount they said they would lend. They didn't downvalue, and it was a RICS report from February, and they didn't insist on another report being done, and you know, those aren't cheap.
What kind of rate banding do you get from them though? Like in a banding, what would you say for you is what you expect from them?
What you mean in terms of rates?
Yes.
So my rate's not too bad, and I don't really know because I don't know what other people pay NatWest, whether or not
Does it begin with a 2 or a 3? I guess that's what Bureau's asking. Does it begin with a 2 or a 3?
Feel free to message me and I'll tell you what rate I'm getting.
So Bureau, give Fiona a DM and she'll let you know the rate she's getting.
I wouldn't say it's good as, not as good as buy-to-let residential rates. No, but you know, it's a loan that suited me. Was quite easy to arrange. You know, yeah. So I'm going through getting some loans at the moment. I've got sort of 2 deals going through at the moment. One's commercial, one's residential. Commercial, I've got it's partial cash. The kind of deal pie, I guess, if you like, is the financial pie is mostly cash, and then a top up with some private. And easy, one phone call, one email, all organised. I'm getting a residential. I was joking that I thought they wanted my son, my 11-year-old son's school report card. They were asking for so much, and bearing in mind it's a lender we've already got loans with, and they dropped the loan to value by 5%, which is fine. We could cover that, and it just got to the point it was like almost painful. And I mean, I'm not even doing it; my broker's doing it, but they wanted full tax returns, not just SA 302s, and just all sorts of paperwork. So the lenders are definitely not in the mood to lend at the moment. So they're almost making it really difficult. I don't know if anybody else is experiencing that. We've got, yeah. So luckily we have all our stuff, you know, sorted out, and we can give all that documentation. But it's a bit like, what next? They wanted to see the documentation for our Go Cardless, for our direct rent that's paid by direct debit, and proof of ownership of Go Cardless, and all sorts of stuff. So kind of a combination of amusing and annoying at the same time. But you've got to get, you know, if you're a property investor, the paperwork process is something you've got to be on top of. So you've got to keep your affairs tidy. So Beer is asking, I don't know if I've got a delay, he's asking about NatWest rate. So, you know, I wouldn't say high street. I've always thought that high street business banking it takes a while to get to the point where you can use it. And it's one of those that they'll lend you money when you don't really need it versus when you're early on. I probably would never been considered for it. So, you know, if you, I finance my commercial through either high street business or private, because they don't ask as many questions, it's a lot less hassle. It's all secured correctly, first charge, etc. It's just so much more easier to deal with. So, or cash. I've also got like cash, you know, my strategy of cash on incumbents that I can then bridge off quickly and easily to grow my portfolio as well. And I appreciate all this takes time to get to. So, but it's nice to know kind of what you can do down the road, you know, what you can build towards to help making the buying process and capital raising process as a property investor easier. So,
did you buy it in a SPV or?
No, I have a limited that I set up and to buy commercial, and so I bought it through a limited. I don't really have SPVs, but it's because I'm my own investor, so I don't have partners. Yeah. So I think SPVs are more when you're working with partners, I gather. So I don't do, you know, don't have that.
And you're not developing out and then selling on to another company right now.
No, I'm boring. I own in various entities, probably too many entities as it turns out, thanks to my previous accountants. And also myself, I own quite a bit myself in my own name. And yeah, so I'm off across a couple of entities, and then I just sort of go, here's the deal. Who's got money? Which entity's got money for the deposit? Because I don't like to move it in between. And who's got the money, the sufficient funds? Okay, I'll use that one. And
you found this, you said, as a business for sale. So where were you looking for that?
When did you say? Where
were you looking?
I think it was literally businessesforsale.com, something like that. I can't remember now. It's November 2019. So yeah, but I mean, doesn't everybody else do that as a property investor? Just get online and trawl through Rightmove, trawl through businesses for sale, trawl through various places for assets, panning for gold. I'm gonna trademark that strategy name. And reaching out to sellers and identifying the ones that come with freehold assets and stuff like that. So I'm more and more looking for businesses to buy that have assets linked to them. So if anybody knows of any businesses for sale, feel free to message me, because property in itself, I've been in this business for 22, 23 years, and along the way I've picked up a couple of businesses, and I'm just thinking it's getting really quite tough out there for property investors to make very decent cash flow returns. You've got to kind of really know what you're doing. And it's also always about what's the opportunity cost of doing this deal when I could be doing this deal, make more money, and effort and energy involved as well. So I know early in my investing career, I really dismissed what effort and energy it would take for me to do certain things. And now that's also one of the things I consider highly, like Red Lion. Yeah, it's tying up a bit of capital, but it's completely passive, very passive. I just don't have to, and I don't have to worry about inspections, and I don't have to worry about repairs, and I don't have to worry about anything like that. The money just lands in the bank account each month, and that's it really. Well, hopefully it does so far.
What does your first quarter of 2021 look like?
Oh, so it's not my first quarter because my business runs on a March year end. So my personal, I goal set in New Year's Eve like everybody else, but business wise, we're aligned to a personal tax year. But either way, next quarter, I'm moving into looking for more businesses to sell, ideally potentially with asset back. So I'm gonna move across from property investor to investor, and I'm looking for potentially purchase in Spain. So I'm discussing with someone on the ground out there. I have to talk to you ladies about this. I can't get to the States. I have a property in Florida and I just can't get there now with COVID, and I need sunshine. I'm Australian, so I'm looking at a villa or an apartment in Costa Calida area to have a kind of a bolt hole out there. And there's with Brexit, there's some really good prices, sharp pricing, which I like. So looking at that in Spain. I'm starting with 2 new board advisors in January. So one of the things that I'm looking at, I'm always on what's the growth capital for my business and where is it coming from. So I'm doing some work around that with 2 new, they're financial based board advisors. So I start with them. We were going to start in November. It's all set to go. Lockdown 2 happened, and they want to meet in person. They don't want to do it via Zoom, and I'm concur just on that particular project that I want to meet in person as well. So we're meeting in January. It starts back in January. And yeah, so I've got my bars closed, my bar nightclubs closed. So currently finding a tenant for that. When the nightclubs can reopen, I've had a few people inquiring and tickling around the edges, but possible of getting that let. I've got, I'm actually disposing of some assets, believe it or not, because I want to increase my liquidity. And for some other investing that I'm looking to do outside of property, believe it or not. And I've got my commercial that I'm purchasing at the moment. That's got a development plot in the car park. So just going through that's close to exchange. We might get that exchange before Christmas. So it's like a city centre, 2 shops, 2 flats. I've got 2 shops, 3 flats going through at the moment. And then hopefully we'll build 4 flats in the car park. Just trying to think, that's just off the top of my head. Always looking at making sure the business is running as optimally as it can. I'm doing a extension at my house as well, so working with the architect from January on those plans. That'll probably take quite a lot of 2021 to get sorted. I'm debating whether to start some business consulting, you know, that kind of love-hate relationship. So as well, I've got my office manager, PA's on maternity leave. She'll come back next year, and maybe working with her on something around business consulting or property business consulting. Is that enough? Need to get more exercise in.
What are you doing in February, March?
Yeah. And you know, we're gonna get any chance to get away? I mean, I'm probably going to go over to Spain 3rd or 4th week in January to on the ground to have a look at some villas that I've been chatting to that contact. So as a property person I've known for quite a while, and she's immigrated out there a few years ago. And so I know from having had 2 foreign second homes, having someone on the ground is very useful. And actually, you like this, Sam, there is a serviced accommodation element to that property, apparently, that, you know, the returns are actually quite good. I'm more interested in having as a place I can go to recharge and be mobile working. And very much, I think the pandemic has really crystallized for me that idea of that flexible working, global working, and that's really where I want to be in, you know, down the road. So being able to go to Spain to a villa, be out there for a week, just work from anywhere. And yeah, so
what would be your recommendations to people listening in on how they sort of think about their first quarter of the year?
Well, I'm a big fan of always having a plan and a blueprint to follow, and I find the people that do better are people that forward plan, have goals, do the work, you know, have some kind of plan and progression, rather than just be in the now focus. So, but I've always been someone that's been quite future focused, and yeah, so best year ever, 2021. There you go. Yeah, it's just always the business. You know, I believe in the business basics. Manage your financial house well, plan yourself, but obviously be open to change if things change. Do the work. You'd be really surprised about how much just showing up and actually putting work in actually how important it is for success. And a lot of people want the outcome without the work, and don't be like that. Don't be like those people. and just, trawling for deals. Yeah, for me, I'm looking at businesses to buy now because I want to do something that uses my business optimization skills and increase the sort of non-property profits of the business as well. So property's really been quite challenging in the last few years with taxation, compliance, government's protection from eviction. So one of the things, just a tip, we brought in during COVID is we only rent to people with a home-owning UK resident guarantor. So, and funnily enough, the people that we want to have as tenants can normally find they can normally find a guarantor. So we've brought that in. It might take us another little bit longer to rent it, but we know we've got that extra layer of security on, on the rental side, and just, stuff like that. So
the questions was, the businesses you're looking to buy, are these viable businesses or businesses that are failing?
Well, no, I'm probably looking for debt-free, profitable, £1 million turnover and above businesses. Distressed turnaround is it's another area of business buying, and you need a lot of time. I wouldn't, if it was a property-related business like a bolt-on to my existing business, I'd probably be willing to put the work in. But I already have a full-time job running my property business, not completely full-time. Lots of it's leveraged now to my fantastic people that I work with, and but but I'm always happy to talk through any opportunities anyway, so we can
So Fiona, have you
message.
updated your pocket rocket?
You've caught me out because it's been sitting there, and isn't it funny how I think of it like exercise, where when you have a trainer to keep you accountable, you always do that much better. And no, I haven't. It's been sitting on my desk. It's been sitting on my desk to update for longer than it should have, needless to say. But so I'm just joining an 12-week accountability program, business one, not a property related one, just for that purpose, to jump back into making that sort of structure. Have you updated yours?
Yes.
Well, there you go.
So Fiona, as we're coming to an end, have you got perhaps three top tips you can give everyone to finish off the year?
Wow. So I don't know. 3 top tips. I would say be happy, have some fun. I always say happiness is life's greatest wealth. It really is. If you're happy, that's such a great foundation for everything. So have some fun, do something that actually you enjoy, figure out whatever that is. It might be a hobby, it might be spending time with loved ones, it might be buying something amazing, whatever. Have some fun. 2 is take stock of your financial position, and even if it's not particularly pleasant, you're having to look down the dark abyss, sit down. I've got a cash check spreadsheet that I use, and I fill in every now and then just to see exactly where we are with all the various accounts and things that we do. And so take financial stock, and keep an asset and liabilities document up to date. I'm good on the cash check. I'm not so good on the asset and liabilities document. And I've just been reminded, I was on a course this weekend for 3 days, investment course, and they were talking about having your asset and liabilities sheet up to date. And I hadn't updated that for probably since before COVID started. So I've got that job to do, and just take, stock of where exactly I am financially, check my financial house. And I don't know, I'd say keep looking for deals. You'd be surprised. In the early days, I used to do deals over Christmas because everybody else was off. So there was very few people around for people to rent houses to, or to maybe to even do deals with. And bearing in mind the stamp duty deadline in March, you can get it agreed over Christmas and then spend January, February, March closing that deal. Now I do like my rejuvenation to recharge the battery. So, but I always say acquisition never closes. So yes, I'll be off at Christmas time, but I'll still be buying. But keep hungry and try some planning for gold, going through those businesses for sales, looking for businesses that have assets linked to them, and see if there's a way you can pick those assets up as well. So I suppose that's really sort of 3 tips off the top of my head. Do you want to give 3 tips as well?
Yeah, I think like the one you said about just keep going.
Yeah.
You've got to do the work, so you've just got to keep hustling and keep grinding is there. The goal setting, so having it in mind and being organised. I always write my list the night before for what I want to be achieving in the next day or so.
Yeah.
And the reflection as well. I need to improve on that. So looking back, and you might think it's been a pretty crappy year, but there will be some bits in there that you can show gratitude for, so that you've got a bit of a balance, and we don't just look at the black. There have been ups.
Yeah. Oh yeah, and I'm a big believer in connection. You know, if you're struggling or there's things going on or whatever, just be part of a community that you can connect to, that can help you out. So, or just, you know, connection is important. The last thing you want to be doing when things get a little bit sticky or there's issues is retreating and into yourself. And now with the magic of Zoom, you can connect even to an even wider group of people. I mean, I'm on a business program and I'm on a global program, so I'm regularly in breakout rooms with people from all over the world, and it's absolutely fantastic. So Karen, did you want to give 3 tips?
Well, what I say is there are 3 components to getting things right, which is mindset, knowledge, and action. And if you do 2 of those, you don't move forward. You need the right mindset. You need to believe in yourself and keep pushing. And just having knowledge but not being in the right place, you're not going to move forward. But if you have mindset and knowledge and you don't take action, you're still stuck. It's the 3 key components to pushing forward and breaking through. So have the right mindset, and that involves keeping yourself fit, something you both mentioned, time to enjoy life, reflect, look at what you've achieved, celebrate your wins and share your wins to refuel yourself, refuel your passion. Keep on learning. Nobody ever knows too much.
Oh, 100%. I agree with that.
Look what happened to Kodak. They were there. They were the market leaders. They thought they didn't have to pivot, thought they didn't have to learn anymore. Well, their business failed. You need to be checking what's happening, using tools like Pestle, checking what's going on out there so that you're current, that you're acting ahead of people. New permitted development rights for Sam and I, for example. New stuff coming through. We want to be looking when there are white papers, so we're secure sites. Changes in legislation, HMO licensing changes, you know, political changes, etc., technological advances. Be there, mitigating things that might come and bite your ass, but also taking advantage of those that give you competitive edge, and taking that big action when others are just sat on their laurels. So that's my kind of like top 3.
And there's so much change going on in the property investment world. Some of it good, some of it, you know, you've got to be aware of that. And, you know, I get people messaging me saying, I'm starting out in property, and I just think, oh, wow, what a time to start. Many, many pros, lots of money sloshing around, lots of people looking to invest, lots of people wanting asset-backed security. But it's also some you know, concerns around, is that the best place to invest? Is direct investment as good as indirect investment? Example, buying REITs and things like that, where, you know, one, my accountant's told me he's making 5% on a certain REIT he's involved in. Well, you know, that's a good return, and he doesn't have 320 pieces of compliance to make sure he's adhering to. And as I often say, property investment is the only class you can go to jail if the worst happens in residential. And that's why I'm favouring more and more. I was probably a dual investor. I was a residential investor throughout my first commercial, 2009. And you start to get, you know, forget where the timelines. And then more and more, I'm primarily trying to do commercial investment. I mean, I picked a couple of flats up this year in the same building, and very, you know, for fun and good pricing. But I'd rather do one larger commercial deal, more of these red lions, than say 2 or 3 flats as well. So saying that, I'm also looking at, because I've exited HMOs in the last 18 months, I've come out of HMO as a strategy because I just make the same money elsewhere, by the way, you know. So, but you know my views on HMO. You know, so small bedsit, small 1 beds, I think people are less inclined to be in shared housing. And if you can get that sweet spot where you know, it's a bedsit or small 1 bed, the right pricing, there's a demand there for that. So trying to meet that demand, working with social housing providers, past 3 in the last month to on 5-year commercial contracts to social housing. Great returns, really great returns, and quite hands off as well. So that's the other thing. I'm just very much about how can I make that return with the least energy and effort expended and the highest security. Yeah, so yeah, well, thanks for letting me tell you about my deal. I'll have to come back and talk about the one I'm doing at the moment because it's even better. What's your favorite deal? The next one. And yeah, so and look forward to, yeah, so we've got any last questions from
I think
any
we've
of the people listening
for now, but perhaps if you get a chance to check in on the comments later on in the day, if there's anything there, if you don't mind answering it, that would be awesome.
Yeah, I've got a LinkedIn training course today on budgeting for 2021, so that'll keep me busy because, you know, I'm nerdy like that. I like watching things like that, and a financial weekly financial review meeting. But probably later in the day. And if anyone's got any dire questions, the burning questions that they want to answer to, they can always drop me a message and connect with me on LinkedIn. If anybody's got some money burning hole in their pocket they want to lend on some asset-backed security, I can always use that as well. I don't do joint ventures, getting too old for that. So, but I don't mind fixed return, financial return as well. Byro says, do you look for viable businesses or struggling one to get a better price? Ideally, debt-free, profitable, 1 million turnover and above is where I'm looking. Otherwise, it's too much work below that. And yeah, so I'm just looking at it as an investment bolt-on rather than full-time work. So.
Well, thanks, Fiona. It's been hearing about this case study and also the time that you spent with us a few weeks back as well. It's been very valuable content. And
yeah. Well, you girls have to come up and visit me and I'll take you to the Red Lion. We'll go and have lunch there.
Yeah.
It's a shame to say I haven't actually made it over there the entire year. Even though it's 34 minutes away, I really should go there for a meal.
Do that.
Yeah, and we can go there and have because the food's, and try that amazing food out.
Yeah. Well, thanks very much. We know we've got a busy day, so we'll let you go. Thanks very much. Bye, everyone.
Bye, everybody.
Bye, everyone.